Along with the list of documents required to file IT returns in 2024, we will also be learning why those are required and how to get those documents. Let's jump right in. Starting with the cornerstone of your tax filing, Form 16. Do you know that this single document holds the key to verifying your salary income and tax deductions? Let's break it down. Form 16 is a certificate issued by your employer, and it provides a detailed summary of the employee's earnings. It is not something that you can download directly from a government website or any other external sources. This form is divided into two parts, Part A and Part B. Part A includes details like employers and employees' name, address, and PAN and TAN of the employer and PAN of the employee, and also the summary of tax deducted and deposited. Part B includes detailed information on salary paid, deductions allowed, taxable income, and tax deducted and paid. It also provides details of any relief under Section 89 if applicable. Next up, let's talk about Form 16A. This form is crucial if you have earned any income other than your salary. Ever wondered how to report interest income or payments made to contractors accurately? This form has got you covered. Form 16A is a certificate of tax deducted at source, in short TDS, issued for income other than salary. It contains details such as name and address of the deductor and deductee, PAN and TAN of the deductor, PAN of the deductee, and most importantly, summary of payments on income such as interest income, professional fee, etc. It is issued by the entity called deductor, who deducts TDS on such incomes. Now, such deductor includes banks, companies, firms, or individuals who are required to deduct TDS. Now let's move on to your bank statements. Generally, people only consider salary income and tend to file income tax returns only with Form 16, which is very, very wrong. It's necessary to look at your bank statements as well, to look for any other incomes earned and also expenses that you can claim while filing your ITR. Remember that bank statement isn't just keeping track of your account balances. They play a vital role in ensuring that all your income and expenses are accurately reported. Curious how? Let's find out. This helps in cross-checking the income received during the financial year, such as salary credits, interest income, rental income, and any other source of income. This ensures that all income sources are accurately reported in your ITR. They also provide a record of expenses incurred, which can be used to claim deductions and exemptions like payments for investments under Section 80C, medical insurance premiums under Section 80D, and donations under Section 80G. Wondering how to ensure that all the taxes deducted from your income have been correctly reported in your ITR? Then Form 26AS is your answer. Let's dive into what makes this form so essential. Form 26AS is a consolidated tax statement issued by Income Tax Department. It includes comprehensive details of tax related transactions associated with your PAN. It includes details of all the tax deducted and deposited against your PAN, helping you to cross-verify the TDS and tax. Form 26AS contains the following: tax deducted at source, in short TDS. It lists all the TDS deducted by various entities such as employers, banks, and other organizations throughout the financial year. Next, tax collected at source, in short TCS. It provides details of any tax collected at source by sellers of a specific goods. Third, specified financial transactions, in short SFTs. It includes details of high value transactions like large deposits in your savings account, investments in fixed deposits, and purchase of properties. Fourth, advance tax and self-assessment tax. It reflects any advance tax or self-assessment tax payments made by the taxpayer during a financial year. Let's see how to download this form from e-filing portal. Log into your profile, click on e-file income tax returns. Under file income tax return, click on view form 26 years. From here, you will be directed to TDS CPC portal. Agree to the terms and conditions and click on proceed. Choose the assessment year and consider view as HTML. Now click on view/download and then export as PDF. Your 26 years will be downloaded successfully. Have you invested in PPF, NSC or paid for medical insurance? Investment proofs are critical for claiming deductions and reducing your tax income. Let's explore why these proofs are must have. If you have made investments under section 80C, like I said, PPF, NSC, etc., or paid medical insurance premiums under section 80D or any other eligible deductions, you will need proofs for them. Even though these amounts are automatically reflected in your income tax form if you have submitted them to your employer under form 12BB. It is always good to verify the amounts yourself. Claiming house rent allowance. Rent receipts are your ticket to substantially tax saving. Let's see how these receipts play a vital role in your tax saving. Rent receipts are crucial for salaried individuals to claim HRA deductions under section 10 subsection 13A of Income Tax Act. It serves as a evidence of rent paid to your landlord. To claim HRA exemption, you need to submit tax receipts to your employer and landlord PAN if the annual rent exceeds 1 lakh. The receipt should include details such as the landlord's name, tenant's name, address, and for which month rent is paid along with rent amount. HRA exemption is calculated based on various factors like the actual HRA received, rent paid, minus 10% of salary and 40 or 50% of salary, depends on whether you are in metro cities or not. I have made a detailed video on house rent allowance and how to calculate this with an example. Click on the link above to watch it. Hence, accurate rent receipts ensures that the correct amount is considered for exemption, reducing your tax income effectively. Do you have a home loan? Then home loan interest certificate is crucial for claiming significant tax deductions on your interest payments. Let's break down why this document is a game changer for homeowners. The home loan interest certificate is essential for claiming deductions on interest paid on a home loan under various sections of Income Tax Act. Section 80C can claim a deduction for the repayment of principal amount of a home loan. The maximum deduction allowed under this section is 1.5 lakh per financial year. Section 24 subsection B allows you to claim a deduction for the interest paid on a home loan. If your property is self-occupied, then the maximum deduction allowed is 2 lakh per financial year. However, if your property is let out, then there is no upper limit on the interest deduction. But overall loss from house property that can be set off against other income head is capped at 2 lakh per year. Any remaining loss can be carried forward for up to 8 years. Section 80EE. This is for first-time home buyers. This section provides an additional deduction of up to 50,000 per financial year for interest on home loan for the first-time buyers. And the eligibility is that the loan must be sanctioned between April 1st, 2016 and March 31st, 2017. And value of the property should not exceed 50 lakh. The loan amount should not exceed 35 lakh. Section 80 EEA, Affordable Housing, Section 80 EEA. This section offers an additional deduction of up to 1.5 lakh per financial year for interest paid on home loans taken for affordable housing. So the eligibility is that the loan must be sanctioned between April 1st, 2019 and March 31st, 2022, and the stamp duty value of the property should not exceed 45 lakh. This benefit is available to individuals who do not own any residential property at the time of loan sanction. Ever wondered how to get complete view of all your financial transactions for a year? The Annual Information Statement, that is AIS, is your comprehensive guide. Let's see how it simplifies your tax filings. The AIS provides a comprehensive overview of all your financial transactions for the financial year. The AIS consolidates data from various sources such as banks, mutual funds, stocks, exchanges, registrars, and other financial institutions. This includes information on dividends, interest income, securities, transactions, mutual fund investments, and much more. AIS aids in pre-filling certain details in your income tax return, reducing the chances of errors and omissions. Taxpayers can cross-verify the information available in AIS with their own records and bank statements. This ensures that all the information about your incomes are correctly reported in your ITR, reducing the risk of discrepancies and potential notices from Income Tax Department. In case of any discrepancies or incorrect transactions in AIS, taxpayers can raise a query or dispute through the Income Tax e-filing portal. Now let's see how to view this AIS. Log into Income Tax portal and click on AIS. Click on Proceed, which will redirect you to the AIS dashboard. Once you are in this page, click on AIS. Here, TIS provides a summarized view of key financial information that is relevant for the taxpayer. It is designed to give a quick snapshot of income, deductions, tax payments, and other significant tax related information, while AIS provides a comprehensive view of all the financial transactions reported to the Income Tax Department for a particular financial year. It is intended to enhance the transparency and ensure that taxpayers have complete visibility of their financial activities. Having these documents ready will make your ITR filing process smooth and hassle-free. Remember, accurate documentation ensures accurate tax filing and helps avoid any issues with Income Tax Department. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more such tax tips and financial guidance. If you have any questions or need further assistance, leave a comment below. Thank you for watching. Jai Hind.